Hello everybody, this is StockerFinance. I'm your host David Shore, and today we're going to be talking about my coronavirus portfolio. And first off, let's just go into the overview here. So this is a quick overview with this little graph here. We have Tesla, we have Microsoft, Disney, Visa, Starbucks, and Arcimoto. The graph is missing Snapchat, as well as a SPY option call and a back put, so I'm going to talk a little bit about options, but not too much here. And, my portfolio has been performing very well. It's actually up around 50% since the bottom of the market here. And so my overall account is actually up about, I'd say, 20 to 25% right now. Since it did take a pretty massive loss initially from the downturn in the market, we've since recovered and are back in the green about 20% to 25% there. So yeah, that's just a little overview. And now I'm going to go through and discuss each stock, why I picked it, why it's this portion of my account, and why I think they're performing well and are going to continue to perform well later on, as well as some other stuff. So let's go ahead and get into it. So first off, let's talk about Tesla. As you can tell by this graph here, it's obviously the largest part of my account. It's one of my largest investments. Snapchat is also one of my largest investments there, but Tesla is an extremely large one and actually taking up the most percentage-wise of my stock market portfolio. And so I did a video, my last video actually, about why Tesla is doing so well and why I think it's going to come out on top during this whole coronavirus and after it, and why it's going to continue to succeed in business. So I'm just going to briefly go over it. You can go ahead and check that video out. It's the last video I uploaded right before this called Why Tesla Will Come Out on Top During the Coronavirus, plus some other Tesla news. And so, a summary of that, to sum it up, is Tesla's extremely strong demand and order backlog right now. Obviously, the Model Y, the Model 3, the Model Y just started delivering. Cybertruck has 500,000 reservations. Tesla Semi, 2,000 plus pre-orders. 2020 Roadster, 1,000 plus pre-orders. And another big thing that I touched on here is Tesla's debt. So Tesla's debt is around $13 billion. And when you first see that number, it can be a little frightening. But when you compare it to legacy automakers, such as Toyota, which has its long-term debt is at $185 billion, Ford's debt, $154, GM, $100 billion. Plus, they still owe $14 billion in an unpaid bailout loan. Daimler owes $106 billion. BMW's long-term debt is $127 billion. So when you see this number, it's actually you compare it to these other automakers, it's minuscule compared to them. So why does looking at this debt matter? Well, legacy automakers do not have the same order backlog as Tesla, meaning deliveries and sales of vehicles are going to suffer during this virus since they don't have a backlog to work on producing. On top of this, most people choose to lease instead of buy vehicles from these legacy automakers, which is a huge issue for them during the virus. Since now more than ever, they need the cash, as well as people may stop paying their car payment if they lost a job or are struggling during this pandemic. So because people are maybe they stop paying their car payments, maybe they just aren't buying them, the dealerships are closed. This means that the legacy automakers are going to have less cash, which means they're going to need to take out more debt to survive and keep them afloat. It's going to add to their debt bubble, and that debt bubble we know is not sustainable and will eventually pop. So as I said, this is an incredibly simple way of saying they're creating an unsustainable bubble of debt that will eventually pop if they don't find a way to fix it. And it doesn't seem like they're doing a very great job at fixing it. I also don't believe Tesla will need to take out more debt or be bailed out since it already has an order backlog that needs to be filled, which means deliveries/sales will continue. Although less people will be buying Teslas during the outbreak, Tesla doesn't operate traditional dealerships. Instead, people can simply buy online, as many of you know, and get it delivered directly to their home. Also, Tesla now offers a touchless delivery system due to the coronavirus, so props to them for doing that. And Tesla's low debt and continued growth of deliveries and revenue, as well as its massive order backlog and demand, will only push this company further ahead of legacy automakers. And its stock price will follow Tesla's success. As we know, Tesla recently had a record delivery number of around, I think it was 88,000 deliveries for vehicles. And on top of this, let me just scroll down here from my post that I made. On top of this, Tesla shipments are surging as the Shanghai plant continues to ramp up. Now, people are worried about Tesla closing their New York/California factories, and a lot of people took this as they shut everything down. But the factories are actually still performing basic operations, and they're also producing parts and supplies necessary for service infrastructure and the critical supply chain. And on top of all this, the Nevada Gigafactory still is fully open, and Tesla states they have enough cash on hand to sustain an extended period of uncertainty. Also keep in mind, as I said with China, that the Gigafactory is now in full production again, and China's sales actually hit a record high in March. So although the U.S. may temporarily be slow to the New York and California factories, China is increasing in demand and production, which is pretty incredible during this crisis. So that's my reasoning for investing in Tesla and why my portion of my portfolio is so large in Tesla. Part of it is because Tesla had a pretty large pullback, so about 380 was about the low there, and I went ahead and picked up some shares, and it's already up about like close to 50% now, actually, in an increased gain, and it's almost at $600 per share now, and that's still significantly below its 52-week high, which was close to $1,000 a share. So yeah, that's just my reasoning and my overview for why so much of my portfolio is invested in Tesla. Now let's go into Microsoft, which has been another huge gain, and one of my, really just a company that I've been invested in for a long time. I really love Microsoft, and I'm invested in them for a few reasons, but before I talk about that, let's just go over its stock price here. So since the beginning of the coronavirus, which is about Valentine's Day, around mid-February, it stumbled around 27%. Now, I owned quite a bit of Microsoft before the virus, and it stumbled and actually didn't really pick up much in terms of the stock price, but in terms of stocks, I picked up a few to average down. But I owned so much anyways that it didn't really matter. It actually only briefly went below the price that I owned it at, and I owned it at around 147. So it went down to about 135 at one point, but then it quickly recovered, and since then, it's up 12% from the price that I own it at. So that's a nice little return there. And the main reason for this is that Microsoft is a technology company that's very adaptive. It's also just it's been around for a long time. It's been through recessions. It's been through wars. It's an older company now that has, gone through the motions. It pays a small dividend. It's not amazing, at 1.24%. And it's still below its 52-week high, which before the coronavirus, which was at around 190, and it's still down about 12% from that, actually more like 13%. So yeah, this is a very large, stable company, and it also has Microsoft Teams, which has been widely adopted by people during the coronavirus who need to communicate with each other, especially for employers. And if you don't know what Microsoft Teams is, it's kind of similar to a version of Zoom and Slack combined. So that is my reasoning for investing in Microsoft, and why, besides Snapchat, which I'll talk about a little bit later, is why it's my second largest investment in my portfolio. Next up is Disney. So Disney's an interesting one. Many people are saying, why is Disney stock up right now? It should be tumbling to the bottom. It should be going out of business because almost, 80% of its business is shut down. ESPN, all the, TV channel, ESPN and all the sports are gone. Which is a huge, revenue builder. On top of that, one of the biggest things, all the parks are shut down, and then all the merch, the merch sales and all the toy sales are going to slow down since people can't go to a lot of the toy stores or buy stuff from the parks, etc. Although people will still buy Disney-related stuff online. However, one of the huge things that I see from Disney is it's Disney Plus, and this is one of the big pluses. There's an article that said the only plus to Disney right now is Disney Plus, and that's kind of accurate, in which Disney Plus now has over 50 million users, and they just released recently in India, which, India's population is massive, and so they're probably going to have a large number of users come from India. And as they keep expanding globally, they're only going to adopt more and more users, which is going to add an incredible amount of revenue to Disney. And unlike Netflix, Disney really doesn't have to pump in much money into development of shows. They developed The Mandalorian, so that cost them, since that was exclusive to Disney Plus, as well as a couple other shows. But most of the shows, they've just plastered up there. They own the rights to them. They've already are profitable shows from the box office, and they just go ahead and plaster it on Disney Plus. People pay to watch all their content, and Disney has a ton of content. They're offering a lower price point than Netflix. And it recently dropped below $100 a share, which for a solid company like this, which has been around since 1923, so almost 100 years old now, which is pretty incredible. We know the stock isn't, the company's not going to go bankrupt, and we know it's not going to go anywhere. I mean, it's been through the Great Depression, it's been through the 2008 recession, it's been through multiple wars, including World War II and the Vietnam War. I mean, this company has been through a lot since its founding, and it's not going to go anywhere, in my opinion. And with Disney Plus, I think Disney's actually going to come out on top once it reopens everything. And this company I'm invested in for a long time. It also pays a dividend of 1.68%. And in terms of how much it dropped from I'm just going to use February 14th as kind of the benchmark date here for the start of the coronavirus. And it went down about 38%, so about 40% to a low of $79. And actually more than that, so about 50% to $79. And now, since that bottom there, it's up about 21%, possibly a little more like 25%. And I didn't scoop it up directly at the bottom. I picked it up more around $100, actually a little bit less than that. I kind of picked different stocks up and picked multiple shares up, averaging down, buying some more. I averaged up a little bit at one point just because I wanted to get in on it. And I also owned a little bit before it happened. So there's been a lot of averaging down for me, a little bit of selling, buying. And overall, I've just been adding a lot of Disney to my portfolio because I think it's super undervalued right now. And it's only adding value with Disney Plus. So when it opens up all the parks, when everything goes back to normal, Disney's going to be in a great position with this huge extra revenue stream from Disney Plus. So it's going to be really interesting to see how that plays out. But I think I'm pretty bullish on Disney in the long term, so multiple years out. All right, so next up is Visa. Now, Visa is interesting. I am not someone who's like a super fan of Visa or anything. Like I am Tesla, and like I'm a big fan of Microsoft, and also what Disney's doing as well. But Visa is a company that I invested in mainly, pretty much simply for the sole reason of that I found that it was undervalued at the time that I invested in it, which is basically the bottom of it went stock, or what I believe the bottom from the coronavirus. So from February 14th, if we go back to that date, it was down about 35%, which is a pretty significant drop. So really just followed the market there in terms of its percentage drop. But then from then up till now, it's at 173 now. It's up about 30% from there. So I'm up about 25% on Visa stock. However, I don't own that much, and its dividend is 0.69% now, which is a super small dividend. I wouldn't say I'm incredibly bullish on this company, but I do think that was just very undervalued for it to be this low, especially for a transaction company. I believe in Visa. I know it's going to be around after this pandemic passes. So I think I was getting it at a nice discounted price, and so far that's proven true, but we'll see how it plays out in the future. But again, it's not one of my biggest investments, but I know it's going to follow the market, and I am somewhat bullish on the market right now in terms of the long run, maybe not the short run. Anyways, my next one is going to be a controversial investment here, Starbucks. Now, normally Starbucks wouldn't be a controversial investment. It's a solid company. It's been around for a long time. It was founded in 1971. But, obviously it's a brick and mortar store, and its other part of the business is it sells a lot inside grocery stores. So that might get a little bit of a boost in sales there. But overall, people are staying inside, going out less, which means there's going to be less sales for Starbucks. They closed pretty much all their stores in China, which is a huge revenue drop for them. A lot of their stores in the U.S. now only do the drive-thru. So they're going to suffer quite a bit. But again, similar to my reason for Visa, if we go to the February 14th, which was kind of right before the huge D-Day event of coronavirus and the whole market plummeted, it went down about 36% to the bottom there, or what we believe to be the bottom. And so its 52-week low was $50.02. Yeah, that's pretty devastating there. And that's from the high here of $99.72. So I own it at about $70 right now. I owned a few shares before, and then I averaged down a bunch. Probably should have sold those shares before it hit the bottom, but it's really hard to time the market. And it pays a dividend of 2.22%, We'll see if that gets cut or not. It might already be. I haven't paid attention to Starbucks too much recently. It's a relatively small portion of my portfolio, but I'm up a slight percentage gain on it, and I believe it's going to be, in a few years, it'll return to the price that it was at, and perhaps it'll go above its 52-week high, which would be very nice. My next one is a little company called Arcimoto. There's not much to say here. This is simply a toe in the water position. I really own just a few shares. It's $1.27 a share, so I really don't own much. I think I own like $100 or something worth of this company, so it's really not that big of a deal. This company could go bankrupt. It wouldn't be that big of a deal. But, I live in Eugene right now, and it's based in Eugene, so it's kind of, I believe in electric vehicles, and I think what they're doing is really cool. From the February, let's go to the 6-month graph there. From the February 14th, it went down about to the lowest point here, 97 cents, and now it's back to 127. I own it, I think, around this price, maybe about like a little higher actually, so it might be down a few bucks, but again, it's nothing significant. It's such a small portion of my portfolio. But I'm going over everything in my portfolio, so I figured I might as well mention it. All right, next company here is Snapchat stock. Now, I've made an analyst review of Snapchat. I've talked about Snapchat a lot on this channel. I'm a pretty big fan. I'm a user. I love Snapchat as a company in terms of just believing in it and believing in its success. And that's simply because so many people and kids my age everyone has a Snapchat. I mean, no one even asks for your phone number anymore. It's just, what's your Snapchat? If I'm on, Tinder or something, I don't ask them for their phone number. I ask them for their Snapchat. I mean, if I'm getting girls' numbers somewhere, it's always, what's your Snapchat? Or, hey, dude, just add me on Snap really quick. That's always what it is for my age and lower. Anyone who's in college knows this, and honestly, it goes a little above the college age range as well, as more older people are beginning to realize its popularity amongst the younger generations. But a lot of older analysts, a lot of people who are, in the financial industry in the older generations don't really understand Snapchat, don't really realize its potential. And I think that's one reason it's been not as recognized as like a real, big social media company like Facebook and Instagram and Twitter. It's kind of just been shut down a little bit by some of these analysts, but it's been growing. Its users have been growing over time. Its revenue's been growing. It's finding the most unique ways that I've ever seen to advertise on a social media platform. Usually with Facebook and Instagram, it's kind of just you just buy an ad, you just buy it for a certain amount of time, just plaster it up there, and it's just kind of in the person's feed or on a sidebar as you go down. Snapchat, though, has video ads in between stories. It has face filters. Snapchat stories was a whole thing that Facebook copied. So the fact that Facebook is being inspired and copying Snapchat, which some people perceive to be hurting Snapchat, I actually think it shows that Snapchat's right. That what they're innovating is working. They're a success because of that. And, Snapchat is a completely different company from Facebook. It's even though they are a social media company and that's what they're labeled as, and they always call themselves a camera company, which I hate that personally, because they are a communications company, in my opinion. People send messages in a unique way through photos. People send videos. You can text. I text more people on Snapchat than I do in my actual phone text messages. You can call. You can FaceTime. It's like everything in one little app there. It's fun. You can play games with your friends on it, have group chats. You can see what everyone's doing on the stories on a daily basis. You can follow celebrities and see what they're doing at a more personal level. And so, the ability for them to grow their users is going to continue to grow as more young people adopt Snapchat as the primary way to communicate. It's only going to increase their revenue. Eventually, they're going to become profitable, I believe, in the next couple years. And let's just go and take a look at its stock price here. So that's why I think Snapchat, and that's why I'm bullish on Snapchat, and I am biased. I've been a Snapchat holder for a long time. I'm a user, and I believe in the company. And, when looking at its financials, I understand people might say they're not great right now, but that's what people said about Tesla as well, and now Tesla's profitable. And if you just look at the graph and the chart and the way that Snapchat is heading, you can tell that they're growing, their revenue's growing, the way the number of advertisers they're attracting is growing, users are growing, etc. And that's why I'm bullish on this company. That's why I believe in it. And that's why I think it's going to be a really big success story later on. So, Now let's just talk about its stock price here. I'll just go over it briefly. So from the February 14th benchmark date there, it hit a low of $7.89, which is a pretty fat drop, over 50% there. That's pretty devastating for Snapchat. And the interesting thing here is, why did that happen to Snapchat? Snapchat's not a brick and mortar. In fact, more people are going to be using Snapchat now to communicate with their friends since they can't see them as much. More kids are stuck at home, which means more people are going to be online. So why is it down? Well, I thought about it, and the simple reason is because people may not be spending as much advertising dollars on Snapchat. Now, that is interesting to me because I think what's in the long run, Snapchat's going to come out on top from this because more people are going to be downloading Snapchat to communicate with their friends and family. To keep in touch with people, are going to be using it more, and that's going to become a habit for these people. And so once this is over and Snapchat gets a lot of those advertising and that revenue back, then again, it's going to be in a very dominant position there. However, I think the stock price decreased a ton just based on the overall market, etc. Snapchat doesn't offer a dividend. Again, it's not, doesn't have a PE ratio because it's not officially a profitable company right now. But I think it will be eventually. Its market cap is $20 billion, which by no means a small company necessarily. But from the bottom there, from $7.89, it went up about 62%. It's at $13.61 now. So I've owned Snapchat at a higher price. I've averaged down, and I'm up a pretty significant amount on Snapchat. I've also was running covered calls on Snapchat in the past, not anymore, to get some recurring revenue to my portfolio there, which was interesting. And to do a covered call, you need 100 shares of Snapchat. So I had a pretty large position in Snapchat at the time. And the reason I didn't put it in my portfolio is because I'm currently out of Snapchat. I've currently sold Snapchat. And you may be saying, why have you sold Snapchat if you're so bullish on that? And that is simply because my option contract got assigned. So I was forced to sell it. And it's the weekend right now, so I can't rebuy, but I'm going to re-enter right away when the market opens back up, unless some crazy news happens and the market tanks again, and I can buy Snapchat at a lower price. But $13.61, I think that's a great price, and I was up anyway. So if I miss out on a few bucks and a little percentage gain, that's not a big deal, but we'll see what happens there. All right, so next up, you may be wondering what else there is. And it is my SPY option call. And I'm not a genius with options. I actually have friends that I talk to who do that more for me and who advise me on what options to trade there. I'm by no means a genius, but I do have a somewhat of a understanding. If you want a great YouTube channel, by the way, to not only learn about options, but just be entertained by some of the absurdity that goes on within the option trading community, go to Kamikaze Cash's YouTube channel. Kamikaze, it's with a K, and Cash is also with a K. And he tells some crazy story from Wall Street bets and stuff. Obviously, it's by no means investing. It's more just gambling. But the reason I am placing options, which I don't usually trade, is simply because I'm very confident in the SPY right now increasing in value. And so far, I've been pretty correct, and I've seen a large percentage gain on my option from that. It's been just printing money right now, which is great. In fact, I'm up so much that I'm okay with just executing it early if I need to. The expiration date is a few weeks out from here, so we'll see what happens. There's still a massive risk. And that is why, because of that massive risk, I have a put on Bank of America stock. And that is simply because it's just insurance, basically, for the SPY. If the SPY goes down and tanks and I lose all that money on the option, then Bank of America will make some money on that, and it'll balance out so we don't lose too much money there. Anyways, yeah, let's go over really quickly the graph of SPY really quickly. So from February 14th, we saw the whole market crash about 33% down to 218, a little more actually than 33%. And then we have it increased now up to the price of 278, which is a 25% increase. So yeah, that option call has been paying off pretty nicely. Anyways, this is it for this video. I hope you enjoyed my portfolio. Feel free to critique it. If I had more money, I would create a much larger portfolio with a lot more stocks. But, I'm limited in my investments, and I believe that if you're really confident in a couple stocks, it's better just to go all in and receive that massive gain that you're hoping for, rather than diversify yourself a ton in stocks that you maybe somewhat believe in and not receive as much large of a gain, even if it may be safer. I mean, you have to take a risk to reap the reward. And so far, I've been reaping the rewards pretty nicely over this coronavirus pandemic. Again, I'm up about 20%. However, I'm up from the bottom, up about 50%, but in terms of me actually being in the green, it's about 20%. And that's pretty nice, especially compared to most people's accounts right now. I'm not trying to brag or anything, but I am saying that, it's important to invest in companies that you believe in, and you don't always need to be super diversified. As Warren Buffett says, you only need to be right once to make a lot of money. You don't need to be right every single time, so don't worry about missing out on every opportunity. However, this is simply my investing strategy. Go watch Joseph Carlson, another YouTuber that I'm going to shout out here. He has a much more diversified strategy, which is dividend investing. And for some of you who are more interested in the safer routes of investing, his channel is awesome. It's kind of a podcast format, and I get a lot of my investing news from him now, actually. I think it's great. He uploads out weekly videos. Go check him out for sure. Anyways, this is StockerFinance. My name is David Scheuer, and I will see you guys in the next video. Peace out.